Hello and welcome everybody to SF Live, an in-studio episode. I'm here in Vancouver and I'm joined by Joe Mazumdar, friend, publisher, editor of the Exploration Insights newsletter. I'm a subscriber, one of my favorite newsletters, I have to admit. Very technical sometimes, but still amazing insights.
Yes, thank you very much. We appreciate our subscribers and thanks for the invitation.
No, thanks for coming on. Really appreciate it. It's the second time we're doing this. I have a bit of a deja vu moment because we recorded an interview about 6 weeks ago and we were muted.
Yeah.
So that's why, bit of a deja vu moment.
I know a lot of people that would like to mute me, so you got the chance.
No, and I did it. I used it, not wisely, but I used it. So, no, thanks for coming in. It's great to see you again. And you just came back from Denver, Colorado, actually. And it's been super busy, I hear, out at the conference.
Yes, it was like compared to last year where we still had some COVID restrictions and people were not willing to travel. This year, definitely there was that pent-up angst to travel and meet people again and make connections. And then we had, some institutional equity. But as the presentations pointed out, and something we pointed out 5 years before, there's less funds going into institutional equity. So there were less of those, but a lot of family offices. So the family offices not giving money to the institutional equity and creating their own sort of thing. A lot of corporate activity as well. And then also the royalty companies that are also sitting on a lot of cash that are looking for new royalties.
Interesting. Yeah. It's one of the themes I've seen, or one of our guests mentioned on the program as well. People are more active investing again instead of passive. Maybe not buying as much GDX, GDXJ, more buying the single stock, more stock picker market.
Yeah, well, I would say that, definitely maybe for the retail, but, according to a graphic that US Global put out and, the data we had almost 5 years ago, most of the money had been going to passive. Because really somebody to beat the passive, there wasn't a high probability that they could on a consistent basis, and it's not worth the fees. So institutional equity probably has less money for the precious metal sector, but what I see is a lot more funds developing new funds which are more related to critical mineral where there's more money to be put to.
Well, you got to play the market, right? So what the market wants, ESG themes and critical minerals.
Yeah, that's right. And so right now, precious metals are taking a step back because, the Fed keeps raising rates and people look for the long term and real rates rising and gold not being the place they want to be right now.
One of my biggest beef with passive investing is that there's money not directly flowing into the companies.
Yeah, absolutely.
That is my biggest beef with it.
Well, that is the beef because and then when they want to raise money, there's less money that they can get from institutional equity. But the problem is, like when you go to the other source, which would be retail as well has left the building. So retail has left almost everything, but particularly resource funds, particularly the precious metal sector. So that's another source that they can't get. And so that's probably why it's such a good environment for one, private equity, and two, royalty companies that are sitting on a lot of cash. Anybody sitting on a lot of cash, this would be the time to reap.
Yeah, no, absolutely. Like, what was the mood at the conference? Obviously, the markets are in complete disarray, for lack of a better term, and not trying to swear here.
Yeah.
But what was the mood at the conference?
Well, probably disconnected a bit between what was happening outside to what was happening inside, because you're sort of talking into an echo chamber and people saying, "Hey, this is a great time to buy." That's probably the main theme, is that things are really bad and everybody hates our sector, so this should be the time to buy.
Yeah. Actually, one of the questions that came to mind, like preparing for our conversation here, is like, could the mining sector have done anything different in the last 12 to 24 months to not be as beaten up right now? Because the investors completely left. Like, there's no trust. There's nothing. Like, we can't fight inflation because we're not making inflation, right?
A lot of it's exogenous. There's nothing you can do. Like up to March, it was actually quite buoyant. Gold was heading to 2,000 and that, and people were raising a lot of money. That all collapsed. We had Russia's invasion of Ukraine. We had China no COVID policy. We had supply chain restrictions and such that inflation started really taking hold. It went from transient to being long term, and the Fed was convinced that they were going to, really pound it on the interest rate rises. And my research, sort of suggests that it doesn't matter what the absolute rate is. It's really about direction. So if people are at a negative rate and they're looking that it's going to go positive, gold will go down even if it's negative. But even if it's positive, but people think it's going to go negative, gold will go up. So it's really directionally where gold's going to go. That sentiment is what drives, sentiment in the sector. And right now, the sentiment in the sector is real rates are going to rise.
And it's obvious. Like gold dropped, and we're recording this on September 21st at 11:24 a.m. PST. And I think 10 minutes ago, the Fed put out their statement, and of course, they're raising by 75 basis points, and gold just dropped like a rock.
But that should have already been embedded already in the market, because the median forecast was a 75 basis point risk, and so there was very good probability that they would do that. The risk was that they might go to 100. And the upside was that they might go to 50. 75, I thought, would have been baked in the market.
I think there was a comment. I haven't read the full release. I haven't had time, but I think there was a comment that 4.5% is going to be target rate for 2023, which is making the market nervous.
Well, I would say even more so, or as much as what the target rate is in terms of the interest rate, 4.5%, but also this is a long-term thing. So the thing is that the expectation, hey, this is going to happen for 6 to 12 months, and then we're going to go back. We might not go back anytime soon. And so that's probably a bigger weight on the sector.
And there's a good segue again back to Beaver Creek and the conference. How much was that part of the discussion when you met with companies? How did that factor in into the conversation? Because we always try to grasp for straws and looking for the light at the end of the tunnel. How do the companies, or how do they define the light at the end of the tunnel?
I mean, we never really talked about that. It was not like a taboo item, but we were all sort of sitting in the same, I don't know, what's the bad? We already were in that echo chamber that we were there and everything was happening. So there's no point in discussing it, because this was all happening outside, and what can the sector do inside? And so definitely quality of the deposit and underlying M&A is what will turn the sector. But right now, M&A has taken a step backwards, such that we're not seeing a lot of consolidation, because consolidation usually happens in anticipation of an increase in the gold price, not in anticipation of a decrease in the gold price. So unless a company thinks that the gold price is going to get up, or something is extremely undervalued, like you see Kinross, they made that acquisition of Great Bear when the sentiment was very much more positive, but now talking to their bigger shareholder, or one of their bigger shareholders, Elliott Management, and now they're talking about buying their shares back. So they're now making a systematic approach to saying, the most accretive thing I could do is buy my shares.
No, they just announced a $300 million buyback program.
Exactly.
Wasn't it? $300 million?
It's 2023 and 2024. And then the thing is that they're going to take, I think it was it's a big chunk. It's 70 to 80% of their free cash flow, taking out, any payments for debt on the financing activity, to say, okay, I'm going to take that money and buy my shares back. So that puts an underpinning under the share price. Sort of anybody knows that they're buyers. Which is good if you're going to buy a precious metal company, knowing that they'd buy their own shares as well.
It helps. It puts some support in, obviously.
But you got to think that all that money going from free cash flow, that's not going to development, that's not going to acquisition, that's not going to anything else.
Or exploration, right?
Or
to a degree.
Exploration,
to a degree.
Exploration would be coming out of their income statement, up in the operating cash flow, and any investing in, let's say, development projects would be coming out of the investing activity. But then it's sort of okay, are you going to raise debt to buy something, that sort of thing.
Always brings us to the discussion, value versus growth, right? What do you want from a miner? I always want growth from a miner, in my opinion, not values. Don't get me wrong, 5% dividend yield on a Barrick Gold is not something to laugh at, right? Yeah. But is that something I'm chasing in buying a mining stock? I'd buy a Johnson & Johnson or a Nestle for that.
Well, that's what the whole approach was behind the mega mergers, were to compete with the Johnson & Johnsons for whatever reason, and then appeal to the dividend shareholders. Say, hey, we're a company just like everybody else. We can maintain these dividends and we could lever them to gold, so I can beat your... The whole idea was to, take the money away from the passive equity ETFs and say, hey, I'll buy a Barrick or a Newmont because these passive ETFs don't offer dividends. That was the whole idea, but be big enough that you can maintain that dividend. But for the intermediates and the smaller companies, definitely the institutional equity funds want them to use their cash flow for growth. But they're now, given the gold price is going up and the margins are shrinking, they're more tentative right now.
Coming back to Colorado, it's usually like the fall conferences, precious metals, Denver Gold as well. There's usually something that comes out of these events. M&A, transaction. We've seen one large financing. Marathon Gold doing the $150 million bought deal. But that was the only exciting headline I really saw this week.
Well, one person told me, like, we were talking about, the lack of funds in the market, for financing and stuff like that. And they were sort of mentioned to me that bought deal that Marathon did, when, they were up against the corner there, and, it was really dilutive, and their, share price reaction, basically reflected that. That sucked a lot of the money that was available for everybody else. So a lot of the people that are looking for 5s and 10s and stuff like that, this one sort of took it all out, and because there wasn't there much to take. Yeah. So that was one thing where people were, if anybody was looking for money at the Precious Metals Summit, it wasn't going to happen anytime soon. Yeah.
Interesting. But like any rumors, M&A rumors, like I'm not even sure who'd be at the top of the list right now, to be honest, for a takeout target. On
the precious metal side, I would say like, one that's come up and coming might be Reunion Gold. Okay. That's building up, it looks like a decent gold mineralization over a decent strike in Guyana.
They're working with Barrick, right? Don't they have a joint venture?
Barrick's gone out.
Oh, that's dissolved? Okay, that was the last
thing. So Barrick was interested in one part of the project, and they weren't interested in this other part, and I'm going to get technical here. There's a zone of an intrusive and another intrusive, I believe, and there's a little package of sediments, and in between that there's a shear zone, and that's where all the gold is. Apparently Barrick wasn't interested in that terrain, and so they focused more to the west, but this is all 100% Reunion.
Gotcha.
And then G2 Gold, I believe, another Guyana company, is right to the north. So that shear zone, which with an ample strike, is basically one of the things. The other one might be predictive discovery on the ASX in Guinea. Mm-hmm. But they're still part of most of their project is in that buffer zone around the wildlife reserve and that. So there's a little bit uncertain there. They don't think that that's an issue, but somebody might. So yeah, it's really what you're looking for is cut right down to the chase and look for quality ounces that somebody would want to buy, knowing that in the current environment there might not be a lot of people that could buy it.
Yeah. Like one news that came out as well this week was Sabina is going ahead with building their mine up there in the north. Are they a takeout target as well? Like, because it doesn't look like the developers are high up on anybody's list right now.
Well, the thing is that there's a lot more attention to the explorers, and hopefully they can get them cheaper, but really the developers would be cheaper. And they'd, like Sabina, permitted and everything like that. The problem with, where Sabina is that logistically you would have to be very, comfortable in working under those conditions, and not a lot of companies are. And the fact that Agnico hasn't come in already because they're, I won't say stuck with Hope Bay, but they've got that one, and they got their own Arctic operations. I don't know how much more exposure. And the problem where Sabina is it's really quite far from a port, and logistically they have to build up a lot of inventory, a lot of working capital, and and people got to get comfortable with that. Not everybody is comfortable with working in those conditions.
No, it's true. And just listened to an interview with Bruce McLeod as well, and he said the ship just left harbor. That's the last one of the year.
Yeah.
And it was just mid-September.
Yeah. And then right? when you're building, if you don't get that ship in, then you could be delayed for another 8 months to a year.
Exactly.
Because
till ice break up again.
Until you can't finish. Yeah.
Well, it's always interesting, and I didn't go to the conference this year, so I really have massive FOMO. Obviously, I felt like I missed out on something. But there's always like that one name or two names that always get circulated. It's like, oh, have you talked to X, or have you heard about X? Was there one company name that could mention quite often, or without promoting them? I was just curious because that's always happens, that there's one name you hear more than once.
Yeah, I would say Reunion Gold was mentioned a lot. Predictive was mentioned. Definitely Snowline came up a lot because of their drill intersections. That's a project I visited about a month ago now, I think it was. But a great people, and the thing is that when people are mentioning these names, the commonality there is really good, strong management teams doing the right thing. And there's not a lot of the speculations all around the geology, not around the people or the jurisdiction or something like that. It's more about, hey, they're all doing the right thing. So yeah, I think that the Snowline definitely was one, Reunion and Predictive. There's probably a few more. Like G Mining was another one I saw, which was a development project. But the twist here is that the confidence people like Franco, La Mancha, and a lot of major investors have in that team, which I think is justified because they have a long history of building with their G Mining services that built Fruta del Norte, that built Marion for Newmont, both projects on time and under budget or on budget. And now they're trying to do the same thing and apply their same skill set to their own company with the project in the Tapajos TZ. I don't want to pronounce it because I think I'll screw it up. But
down in Brazil.
Yeah,
so.
But I did the math. Like I did the math, and I did it badly, I think, in the letter. So I thought that at 1,700, 1,800, the cost of capital was much higher at 15 to 17%, which is more typical of a stream on your main product, which is gold for them. But then I did the math again after talking to their VP corporate development. It's more like 5 or less. So they did a really good job of capitalizing themselves at a low cost of capital, even in this market, such that overall, if you take their equity, you take their debt, you take the stream, which is a significant part of the overall package, you could come up with like an 8 to 9% cost of capital for a company that's operating in a remote part of Western Brazil.
Interesting. Now, that's one I'm following closely as well. I'm having an eye on, and they're attending our conference. Probably can see it behind me. DEUTSCHE GOLDMESSE as well in November. So actually, a couple of the companies you mentioned. So
well, the confidence is in the people that they know what they're doing because they have a history of doing it, and so that's the sort of premium that you'd want in buying a precious metal stock now. You don't have to go for the person that doesn't know anything. You would want to go for the person that knows a lot, and they've got a lot of history of doing it. And it's definitely the case for G-Mine.
Absolutely. Yeah. No, I've heard good things about their building team, its construction team as well.
Yeah.
Of course, you get to pick your own meetings, right? So you didn't get put in front of 25 companies randomly. So it's a bit of a biased question, but like the mood of the juniors and the CEO is like, how depressed are they right now? And I think it's quite binary. It's like either you have cash or you don't have cash.
Yeah, I'm not a psychologist, but most of the companies I met, I refined down to the ones I already own. And most of the ones I own have working capital. And I'm just looking at, okay, like let's say Liberty, I met with them, but they're divesting their stuff in Turkey as opposed to going to the markets to fund, their Black Pine exploration activity. So a lot of people are sitting on cash. If anything, some of them that have raised a lot of money are sort of coming back and saying, you know what, we're not going to do a lot of work here. We were thinking we might have a drilling program here, but we're going to save it for this other project. So there is a notable sense that, hey, we're not going to do this technical study because the market doesn't care. We're not going to do this because that's just a waste of money. And so people are getting very specific about what catalysts they'll deliver and how they'll deliver them in a very strategic form because they don't want to go to the market, give them something that they just create a liquidity market event and just have their share price go.
What do you expect to happen over the next 3 to 6 months as well? Like, let's leave out the Fed and the U.S. dollar obviously hanging over everything. But what do you expect to happen in junior world? Like in our world, do you expect a trend change? Do you see the juniors behaving very differently? Because you said like, well, they're even hesitant to put out catalysts, meaning news.
Yeah,
because they're not getting any love for them.
Well, I don't see the sentiment changing that quickly, especially since the Fed is saying that, the interest rate target, what you're saying, a 4+%, but also that might stay longer. It might not be a 6-month, 12-month thing. It might, because if inflation stays persistent, this could be a multi-year thing. So if it's a multi-year thing and real rates keep going up or stay up, then the gold sentiment will continue to be negative, and if anything, it might the positive might be it just stays flat.
Yeah.
But it'll never probably reverse to saying very optimistic for a while. Like a while meaning more than 12 months.
This is making it tough for me. I feel like closing my laptop and just leaving and come back in 2 years.
Well, I mean,
right? There's a very few stories like a Snowline Gold that went up, but even a Reunion Predictive, they all came back.
Yeah,
right?
which is great for me because I don't own them yet. So I'm just holding on and waiting for my moment. And this is a great time to do these conferences like yours and just sort of see which companies are out there and then pick the prime of the prime. You don't have to pick, the greasy stuff on the side. You could pick the prime beef, and you might get it at the price you want. So that's the thing. And then, but the problem is you'll never pick the ultimate bottom.
No.
So if you're going, but just with the knowledge that if you buy it now, that it could be cheaper in 6 weeks. But knowing that this is a project that you like the people, and it's a decent M&A target.
What's your investment horizon right now? If you were to buy, let's say your Reunion.
Yeah.
Okay, just for lack of a better example. Let's say your Reunion. Is that a 6-month trade, 12 months, 24? Like, what's your investment thesis for?
If everything happens there, like I haven't bought it yet, but my investment thesis there for that one in specific would be sort of like an 18-month target. But other ones that I have in, let's say, like Liberty, I might hold it longer because I like the people. I know what they're trying to do, and a big resource there in that part of Idaho that they've got water. That's the other thing that you got to layer onto this, because if you don't have water, you don't have anything, especially now with the drought conditions. But I don't think mining is on the upper rung with respect to competing for potable water in the U.S. or anywhere really.
No, not really, unless you're in a very specific basin, I think.
Yeah, you have to be in a place that there's no access by anybody else. And that's also what's happening in Chile. They're trying to get Albemarle, I think it's, and a couple of copper companies to basically say that, hey, you took too much water out of this aquifer, So water is another issue that in M&A, if you don't have that tied up, it's going to be harder.
Yeah, no, I think it was a big factor in actually Anglo buying Corvus. That's just my opinion.
Yeah,
was the water rights there?
I think you're up. Well, it's not only the water rights, but it's all the property, because they did have that stuff around before. And I think now that they've, from what I heard, that now they've bought the land from Core to the further south, which takes a lot of that ground out, which was a transaction that was going to happen. So now Anglo's consolidated all of it. So that's where you have a major company with a grassroots exploration that made a major discovery, and now they've got over 3 to 4 million ounces. But the prognostication for that one is that that's going to be a 5 to 10 million ounce thing that a major is basically sitting on. And so with respect to my royalty exposure, that's why Origin is
Origin,
one of my
right?
top picks.
Owns the Silicon royalty, I think.
Yeah, that's right. Yeah.
Now, the reason I was asking you for investment horizon, because the quote came to mind, like the markets can stay rational longer than you can stay solvent.
Yeah.
Right? That's
my solvency, that's
right. So, like I love to see all these bargains, but cash and selling and liquidating some of the stocks I owned, it's painful.
That's the biggest thing is some people aren't debating what they're going to buy, they're debating what they're going to sell. So for me, when I sell, it's like a company did something that goes against what I'd like them to do with respect to a management, like how they financed a project or a move that they did that I didn't like. So Trilogy, I've got no problem with the management team, got no problem with the asset, don't have no problem with the partnerships. But the permitting of that project, and the retraction of the road access permit makes me think that's going to be a too long of a horizon for me. So I sold that one, but not because of the management or anything like that.
I just put out an update this morning, I think, on that road with the BLM and stuff.
Yeah. I don't.
Let's not get into that.
Yeah, I don't see under this current administration a big change right now. They're going to slow walk that. The other one I would say is like with Bluestone. I own that one. Again, great management team, access to financing with the Lundin family, everything like that, good. But Guatemala just, whenever you get a project that's closer to doing something, the NGOs come out of the woodwork and they slow the project down again. So, so jurisdiction and where you are specifically within that country, the permittability, the development ability of that project is really important.
Now, I think we should bring Nikki on next time as well, because she gave presentations on how to sell mining stocks, and I think I need another lesson because I'm terrible at it. But I don't want to sell anything right now. To liquidate maybe and buy something like a Reunion, like something where I see value even in the future.
Yeah. But
I don't want to sell any of my dogs because they're so cheap, and I think it's like I can't sell at this level.
Yeah. The only reason I would sell.
Help me.
The only reason I would sell is because a company basically ticks me off.
Yeah.
And I don't like what they're going to do, and I think that they might do something stupid again. And so that would be the one I would sell, and that's the ones I've been selling. And it might not be their stupidity. It might be stupidity of the government, like with Trilogy. Yeah. It might be the problems being in Guatemala, like Bluestone, which had nothing to do with management.
Yeah.
So, but other ones, yeah, it is management that makes me want to sell.
Yeah. Let's stay on the theme of selling. It's not the best theme, but we got to stick on it because tax loss is coming up.
Yeah.
Tax loss season. Like I'm jokingly saying, well, there's nothing left to sell really. Like who's going to be a seller in this market, right? Like are we going to experience a massive tax loss season, or like how bad is it going to be? Like, is there any?
Well, there's still, because some people think that you have to do it right at the end of the year, which you don't. But there might be some pent up. But the thing is that's the sort of companies don't want to put up that flag to take advantage of when they put out a catalyst. So, in terms of somebody coming out with a deliverable before the end of the year, they're probably more reticent to do that, to get into, because they need liquidity. So if you want to sell, you might be selling for, 90 days, slowly. And each time you sell, you're going to sell at a lower price. So you wait for that liquidity moment when they put out a new resource or they put out a new study, and then you sell. And that's the problem that people are seeing in companies. All their catalysts are being met by negative, downward pressure.
Yeah, come December 1st, I don't think we'll see any press releases. It's sort of like summer, like just going up to Labor Day, right?
I think they might stop before that or delay or say, hey, you know what? Why bother doing a scoping study?
Or that,
yeah. And that's what I've heard a lot of companies saying.
Just skipping it completely.
Just skipping it completely and going into a PFS or a feasibility study and doing that later. But right now, because the retail market's only interested in the resources, and the suitors, the potential suitors, can run their own numbers.
Exactly. They don't need a dream sheet.
They don't need they don't need a scoping study that they don't believe.
Exactly, because they're going to do it differently anyway when they take over. That's
exactly,
usually
but
the thing.
The other thing is that we got to recognize is the potential suitors are using different gold prices than the companies, and so that $200, $300, and sometimes $400 difference in the gold price is what they're going to run their numbers on.
Oh, that's another interesting topic for discussion. Like, maybe we'll squeeze that one in. It's like companies using different gold prices.
Yeah, well,
and
Newmont
right now is like it's varying. Like people are using $1,700 gold in some of their studies.
Yeah, well, for a resource, it's okay to use that, but for your economics, it's harder to justify. Because still Barrick and Newmont and some other majors are still using $1,200 to $1,250 for their gold prices, and so if they're looking at an acquisition and bringing it in, $1,500 might work for the resource, which you give them, like you're inferred or you're indicated. But if they start working out block models on that and they want to convert it to a reserve, then it's going to be $1,200, $1,250. Does it still work? Yeah. And there's also, I think, a motivation now as people are trying to go, how we go from underground to open pit, like in Northern Ontario, a bunch of little underground deposits, and now you go to open pit. Now in Mexico, because there's this fear that the Mexican government under the current president is slow walking open pits. They haven't banned them, but they sort of slow walking any permits. So people are thinking, hey, I'll just do it underground. And so to lower the footprint in this current, ESG aware environment is another move that people, and not everybody can do it. If you got a low grade disseminated deposit, you're not going to convert it to an underground. But if you've got, a high grade sort of core, there's that option.
A lot of different aspects going into it. It's interesting. It's not an easy market anymore. It's very difficult. As I said, it's a stock picker market, so you really got to know what you're looking for.
Yeah, the thing is that in terms on your horizon, you might not get that retail boost and saying you're sitting back saying, oh, that project will be hard to develop and stuff like that, but retail will still push it up. No. Now there's not retail pushing it up as much. There's not as much retail buying of every little play that comes out with an intersection.
Are you going to come up with a buy recommendation in the next newsletter coming out of Beaver Creek? I'm trying to push your newsletter a little bit here, so people will flock to explorationinsights.com and go sign up, right?
If I put my buys out here in public,
no, I'm not saying that. No, I don't want you to put the name in here, but I'm just asking if there's
absolutely.
There be a buy recommendation coming out of the conference?
I've got 2 or 3 companies that, but it's all timing in terms of, hey, when does the last private placement come free trading? Because there's not a lot of liquidity in the market. Yeah. And what I've found is I've bought and they've only gone down. But I've got a longer term investment horizon on most of the ones I've been buying. So I'm not that worried because I like the project, I like the people.
It just doesn't look good though.
it just doesn't look good. No, it's not. Yeah, it doesn't look good. Yeah. But the problem with any portfolio, anybody that's handling this is that what do you sell because the whole idea is to sell the winnings and take those and reinvest them.
Right?
But
what winnings?
Yeah, what
It's
winnings?
tough. There's only a few names that come to mind that actually performed well.
Yeah,
Not many. Probably 5, maybe.
Yeah, I mean, Snowline's done very well. Western Alaska Minerals has done very well. And then there's probably a few more that off the top of my head. But the thing is that, some of these companies are getting funded, but they're getting funded by different sources. Private equity, royalty companies, like West Haven did a royalty deal with Franco-Nevada. Which I think in this current market was a big positive for them. And they also sold their royalty on Talisker. Talisker's ground. So I think given where they're trading, that was a great move. And I think that's what the royalty companies see, because until March they couldn't buy a royalty because they were also I mean, they could, but they would be paying a lot of money. Now the royalty, to get a royalty is sometimes, for the precious metal guy, the only thing they have that might be nominally accretive.
It reminds me, the Shovel Nose royalty wasn't part of that. Shovel Nose was excluded from it, was it?
I think it was for their whole property.
Is it the whole property?
The way I read it, was for.
Because then I'm wondering if $6 million was a dirt cheap deal for Franco.
No, they got that, and then they did another deal. I think it was $750,000 on the Talisker ground. Gotcha. because
Spence's Bridge up there, right?
Yeah, so their thing was on Spence's Bridges, the whole property.
Gotcha.
But they didn't have they also retained a royalty on the Talisker ground. So they sold that too.
A fantastic creative financing solution to come out of that hole and keep delivering value, hopefully.
Which is what you need right now in this current market. The management team's as important as it is for them to be technical, but also to be financially aware of the options that in terms of dilution.
Absolutely. And you don't want to raise money at this point. Anyways, like in the case of West Haven, that would have been so delusional.
Yeah, and it was for Marathon. But Marathon had no choice because they'd already raised the debt. They had permitted, and so what are you going to do? Sit on your hands? And so I had this argument. We have this discussion with Paul Harris on our podcast that, in this environment, where gold's going and where you're at in dilutive financing, just sit on your hands. Don't build anything. And that's hard for a junior to do because they have nothing else. No. They could say, okay, I've just shut off all my news flow. I'm going to, fire myself, and I'm just going to sit on this project, which a private equity firm would do. But also Newmont is doing. So they're basically saying, okay, this is not the time to build. So we're just going to slow down our growth, because what's the point in accelerating growth into this environment and paying 30 to 40% more on capital? So when I talked to G Mining, one thing I got out of it, and these guys are builders and they know what they're doing. They basically told me, that there was a feasibility study done on the TZ project, the open pit gold project in the Tapajós in Western Brazil. And then they said they did their own numbers, which they'll be coming up with. But, scope to scope, meaning everything's sort of the same, 30% increase. So anything over that, something else is happening potentially. And then when you see Marathon with its 55 to 60% increase, something else happened, and it wasn't just
inflation.
Just inflation. But granted, like in Canada and the US and Australia, labor rates are the other issue that they have to deal with, because there's just not the availability of labor.
I spoke to one CEO, and he said, well, contractors were like giving him 24-hour deadlines on taking the proposal or not. Like, this is only valid for 24 hours, and then we have to change prices again.
Yeah.
It's like, how do you work with that?
But I've also heard the other thing is that some of these people are trying to trick the developers and say, hey, if you don't give me a number now, I'll sell it. But 2 weeks later, the number hasn't changed. So it's
tricky.
It's tricky because of the supply chain stuff. That's definitely the issue.
Absolutely. So let's summarize the conversation a little bit. Like, challenging fall, tax style selling might be looming, news flow is going to slow down again, and then let's pray for January.
Yeah, praying is really not a great strategy. But the thing is that I think whatever portfolio you have, whatever companies you hold, you'll have to think that, is this company, can it work at a lower gold price? And are these managers that are running this company financially astute enough to know when to slow down the news flow, protect their working capital in this environment, and then make as accretive financing deals as they can, either with private equity, royalty companies, or something like that, to keep the ball rolling in this environment to advance the project, knowing that probably retail isn't there.
Oh, that's the tricky part, finding that balance. But you need news flow to sort of keep people interested. It's a two-edged sword. Like, it's so tough. Whatever you do, it's wrong anyway.
The other thing is that institutional equity who own 2 or 3 different companies and say, well, I like that management team. This sort of management team is screwed up a bit. So why don't we just consolidate them all, cut the G&A, just use their capital to focus on this guy's project, and then we'll just hold those as options. So that's another thing people are moving to. You know, the big idea that, you know, we've had a lot of IPOs and new companies come out as gold was going to 2000. Now we're sort of retracting again to say, hey, maybe we need to drop the G&A or from these zombie companies that just turned into zombies in April.
Pretty much, yeah. March 16th, first Fed rate hike. That was the end of that.
Yeah.
So
and that's
really curious to see if there's a follow through, because there are not enough investors out there that have control like that could demand that.
And what we got to realize, like, when we talk about the gold price and everything like that, part of it is the U.S. dollar strength. But if we look at other currencies, the gold price is actually up. Yeah. So we might not have precious metal equity investors, retail investors in the U.S. and maybe Canada, but we might still have them in Europe and other places that still want that kind of exposure. And, you know, people might go into different places. I know there's a lot of money in the Middle East that's taking the oil and gas revenue and going into mining. And some of it is precious metals, so that's another funding source if you're in that area. So sovereign wealth funds as well might be another source of financing. So there is money out there, but you got to be know where you can access it.
It comes back to the smart management teams, right? Trying to find those pockets.
Exactly, and just having somebody that just knows one thing and gets swayed to raise money with, let's say, a 2-year warrant at a 15% premium, a full warrant, then, you know, oh my God, you know, I'm struggling. Yes.
Brutal. Joe, thank you so much for coming. I think it was a fantastic conversation. Absolutely loved it.
Okay.
Really appreciate your time. And explorationinsights.com obviously is where we find more.
Yeah, I'm glad you're plugging it because I always forget.
Have to. Come on. You're doing me a favor. Might as well do you one. Thank you so much. Everybody else, thank you so much for tuning in. I absolutely enjoyed the conversation here with Joe. Make sure to follow him. Go to explorationinsights.com. Follow us on YouTube. Follow us on Twitter. I know over 80% of you watching don't subscribe or are not subscribed to the channel. So let's change that. Do me that favor and leave a comment. What do you think is going to happen? When do you see and how do you see light at the end of the tunnel? And what shade of gray is the light at the end of the tunnel? Really curious to hear. And thanks for tuning in. We'll be back with lots more very, very soon. Thank you so much.